Hey everybody, Uzi over here at Cashflow University, also known as CFU in the trading community. And in this week's video, I'd like to go over a few trades from start to finish, what we saw in the chart, the option strategy we used, and how we closed the trades. I'd like to go over a few of our other pro traders' results, and I'd like to share with you a few of some members' reviews that were posted recently on our WAP website. Before I get into all that, though, I'd like to tell you a little bit about who we are and who we aren't. So CFU is not a signal service that sends buy and sell signals out and hopes that you do well in those trades. And we're not a one-trick pony, so we don't just do one type of strategy. We have multiple strategies that we utilize when we send out alerts. And what I'd like to share with you, though, is who we are. And what we are is a team of 8 pro traders each and every day of the week, sharing their trade alerts with the members. What's nice about that is we have 16 sets of eyes scanning the markets, looking for the best return on risk setups. You also get a variety of different strategies. As you'll see going forward in the video, that we utilize many different option strategies during the course of a week. Each alert from our pro trader comes with the trade entry, the management, the rationale behind the trade, as well as the exit. It's all clearly outlined for a member to see and execute in their accounts. Another thing that sets us apart from other Discords is our technical analysis channel. So if a member is having an issue with a chart, they're not sure what they're looking at, they can request a chart map out of technical analysis, and we'll get it to them within 24 to 48 hours, and that's included in the membership. You also get a great support staff. We're always there if you have any questions, concerns, and a lot of our members also like to help out. We have members from beginners to the very experienced, and they also like to chat about the positions that they're in, and so there's a lot of camaraderie about the trades. All right, so let's get into the first trade. The first setup was a cash secured put trade. The symbol is ABGO, which is Broadcom. It's a big name in the semiconductor industry. And we've been having a little bit of a pullback in some of the semiconductor stocks, and that's what Broadcom was doing, as I'll show you on the chart here. So we had a daily pullback in progress, as you can see, series of down days. And we got short the cash secured puts on this particular day right here, as you can see with the white arrow. And the setup was great. What we had was 2 key factors in choosing the strike. We chose the strike of the 160 cash secured put, based on the fact that we had, first of all, we had the 50-day moving average and the 38.2 Fibonacci retracement level lining up together right there. If that were to fail, we had the 50% Fibonacci retracement level right below, and that lines right up with the 160 strike that we chose to sell the cash secured puts at. So we had great support levels. That's how we decided on the put strike, and it wound up working out pretty well, as I'll show you in the next slide. Here's the math behind the trade coming up right here. So what we did was we sold November 1st expiry. So we were giving ourselves about 7 or 8 days. Okay, we chose the 160 strike, and we received 98 cents per contract. Okay, to close those, okay, let me back up. So here's the actual confirmation by the trader, and the trader actually happened to be me. This was my setup. I loved it. The 160 put, we received 98 cents per contract, and then we closed them at 39 cents per contract, as you can see over here. So we got to close at 39. So the math comes out to be $59 per contract, which is 60.2%. And it took 2 days for that trade. Now we had 7 days to go before it expired. So this was a case where we were able to close way early and book those profits. Whenever we can do that and take that money and then put it into the next high return on risk trade, that's what we like to do, and that's what we did. All right, let's go over the next trade, which was on a symbol call named TSCO, named Tractor Supply. The trade was a put 111, I like to call it. It's where you buy a debit put spread and you sell a cash secured put on the end of it. We do this all in one order execution. and it worked out very well as well. Let me go over that trade with you. So the setup here was similar but different in the sense of we did have a pullback in Tractor Supply, okay, and we knew the earnings were coming, so we put the trade on, and we didn't know what to expect, but we know that Tractor Supply can move dramatically, so we wanted to protect ourselves on the upside. Now, this type of a trade, the put 111, has no upside risk. Okay, so the stock can go up, to the moon, and it will have no risk whatsoever. Now, the only risk is on the downside. If the stock continues to fall and fall and fall, you might have to then roll your cash secured put at the end, or you may have to take assignment and then begin the wheel process. But this trade worked out perfect because we did have the stock realize a pretty significant down move on the earnings, which you see this candle, this bar right here. It fell through the 50-day moving average, which is that line right there. But what we did have was we had support from the 61.8 Fibonacci retracement level down below, which we felt was going to be a pretty safe level because below that was the 200 moving day average. And it's a good company. They have great earnings. And usually a good company will at least hold onto the 200-day moving average. But we chose this strike because it was right above the 61.8 Fibonacci level. So just let me remove all these yellow marks. So you can see how it fell and fell and fell, and the 61.8 caught it. It actually didn't land on it, but it was closed right above. And you can see where the stock did close. We had the 272.5 strike, as I'll show you in a moment, and the stock closed at 272.77. Now, this was a little too close for comfort, so we decided to close both the put debit spread for added profits, and we were able to close the cash secured put separately for added profit. So let me show you the math behind this this great trade. So again, the trade involves basically two components. You have a put debit spread, which you buy, but when you sell that cash secured put below it, which is at a lower strike, you can see we bought the 277.5, we sold the 275 put, and then we sold an extra 272.5 strike put. So that's the 111 aspect. And because we sold this cash secured put, we actually brought in a credit. Had we just bought a put debit spread, of course, that would be a debit. So this brings in a credit of $64. And you can see that right here. We buy to open the 277.5, we sell the 275, and we sell the 272. We bring in $64 in credit. Now, when the stock moved down, we were able to sell the long put debit spread. So we sold that for 30 cents, which is $30. That enabled us to add that into the equation of the profits. So let me just erase all that for now. And then we also closed the naked cash secured put for 10 cents to make sure that we didn't have any assignment risk or any issues at the end of the day. We closed that late in the day today before expiration. So the math turns out to be like this. By selling that put debit spread, we brought in $30. By selling the cash secured put, we brought in $54. Now, $54 on the original $64 is an 84.3% return on that premium. We add in the $30 recouped from the put debit spread sale, and that brings us to a grand total of $84 of profit. And by bringing in that extra $30, we added 46.8% onto the premium profits. So that's how those trades can work out when things go well, and it did. All right. I'd like to share with you now some of the other results from the action in the room by our other traders. This week, Kyle was the big winner on the trading board. That's why you see his name here 3 times. He had some phenomenal return on premiums right here, as you see, and with a multitude of different symbols and different strategies: covered calls, call credit spreads, and cash secured puts. Now, we also do what's called, we have some systems trades that our founder, Stephen, operates. So you'll also see that we have what's called weekly income. And that's a whole other set of trades that get generated, and Stephen handles that. All right, I'd like to get to now those reviews. If you stop at our website on WAP, you'll see some of the reviews that have been posted. And I just want to, highlight a couple of things. This member up top here joined in February of 2021, and it's been a life-changing experience. As he or she states, that trading can be tough, overwhelming, and frustrating. But that the insights and knowledge gained here is truly what's transformed him, he or she, in his trading. And then down below, you see this trader mentioning that that they feel that this is by far the best stock and options Discord out there. They've been with us for 2 years, and they plan on being a lifer. Now, if these are the kind of results that you'd like to see showing up in your account, it's simple. All you have to do, stop by joincfu.com. There's various ways for you to enter our programs, different price levels, different length levels. There's something there for everybody. And yeah, stop by. We'd love to have you. We're welcoming new members each and every day. And the support staff is there to welcome you and get you all up and going. So once again, the link is at the bottom, Join CFU. Hope to see you there. Hope you got something out of this video. We like to make things educational as best we can. If you don't mind, give us some comments on this. Add a like and subscribe if you feel you might like to watch the next couple of videos coming out as they come out. And we'll see you on the next one. This is Uzi signing out. Thanks for watching, and we'll see you on the next one.